As if this week's tumbling sales figures weren't bad enough, the news that two of the biggest car financiers were pulling up stumps has threatened to throw the industry into crisis. As Kathy Swan reports, there's talk the withdrawal of the financiers could see $2 billion worth of dealers' stock repossessed and cost 45,000 jobs.
We probably need a little bit more information as to where the business is heading, like a business plan perhaps.
If you're looking to buy, getting finance for a new set of wheels could be a major hurdle, even though cars are now more affordable than any time in the last 20 years. There's a crisis looming in the car yards, with two of the biggest financiers, US-based giants GE Money and GMAC, both deciding to get out of the motor vehicle business in Australia.
They hold close to 35 to 40% of the market, I believe. It will leave a vacuum in the market.
60 days is simply not long enough for us to refinance. We need much longer. So we'll certainly be pursuing that issue with those two financiers with a view to getting that deadline extended.
VACC Executive Director David Purchase says the big problem for car dealers is they don't actually own their floor stock. Every car on the showroom floor is owned by a finance company.
So when the manufacturer provides the vehicle to the dealer, then the manufacturer is paid by the finance company, and then the dealer has to pay an interest rate every month, a little bit like a mortgage. But essentially those cars are owned by the finance company, and dealers simply could not fund or finance the vehicles that they have on their showroom floor.
We have a number of dealerships at the moment that we're speaking to about arranging commercial facilities and then writing their retail contracts for their customers who buy cars.
It's a spike, yeah, but I want to see another couple of weeks before we know how that's going.
Rob Chaloner is Managing Director of Stratton Finance, which is looking to grow from its fairly modest 65 employees nationally and about 200-odd million in motor vehicle finance. And he says inquiries have escalated since GE and GMAC decided to pull out.
On the retail side, yes, we have, and on the wholesale side, I wouldn't say we've been inundated, but we've certainly had upwards of 100 dealerships contact us in the last 2 weeks to see what solutions are available.
This could not have occurred at a worse time, and I would have thought that, I know that the financiers' requirements will have tightened up considerably, and it will indeed be harder to get finance than it was just several months ago.
The odds are neither GE nor GMAC wants to go to the trouble or expense of repossessing thousands of vehicles, towing them off to mass auctions and making just a fraction of their money back.
If you say there's, $2 billion worth of cars that obviously they want to exit the country with $2 billion, don't they? They don't want to exit the country with $250 million because that's the kind of penalty they could pay in distress selling cars. They'd be sold at very low prices.
John Mellor, publisher of Go Auto Media, says GE and GMAC will have to be flexible about the December 31 deadline they've set for car dealers to come up with alternative financial arrangements.
Who was the worst affected?
Luxury market was the worst again, naturally.
Right.
They have to keep these cars in dealerships and help the dealers clear them, because I don't think they have a choice. I think that it would be an absolute train wreck if suddenly 20,000, 30,000 cars were to be put out to auction.
That will destroy the car market for the remaining dealers for the next 12 or 18 months. Now, the manufacturers are themselves in a lot of trouble. If you have a look at GM in the United States is losing $1 billion a month, and Ford are in much the same position. They've got incredible difficulties of their own, and I think their ability to be able to provide funding is fairly limited.
Motor Trades Association of New South Wales CEO James McCall says car industry job losses caused by the two financiers pulling out will spread from factory production lines to the car yards.
In New South Wales, dealers employ about 30,000 workers. So you're looking about 15,000 jobs in New South Wales alone that will fall over, and some 45,000 jobs across Australia. This will have an enormous impact on the national economy, not only on the motor sector.
Indeed, the global auto industry is on the skids. US giants Ford and General Motors are racking up multi-billion-dollar losses each quarter, while in Asia and Europe earnings forecasts are being slashed. There's talk that as early as next week, the federal government will release a major new funding package for the auto industry. But with finance drying up and buyers' anxiety levels rising, the road ahead looks anything but smooth.